Okay, so this is the second video, right? This is the main section, to be honest with you, main section of IT, auditing. Also, after you watch my videos, I just look at all the slides because they're summaries because it helped me to like study this thing. Because I'm not gonna lie, this thing was so hard. I skipped this topic, went to other topics because it's just like too much information and like it ain't working out together, right? Okay, but I'm gonna explain simpler because with my friend ChatGPT we got to arguments with these topics and I got a better understanding out of it. So introduction to information systems auditing, right? Now the whole thing about information systems auditing, you need to get the bigger picture of the head what we're trying to do. What we're trying to do is this, right? There's going to be a big business that you're looking at. You as an auditor needs to audit. So what does this mean? In a business, you need to protect information. You need to protect your computers. You need to make sure everything's working properly. You do this by something called controls. So the control is implemented. This is the most important by management. Controls is implemented by management. Management will put measures in place to protect everything in the business to make sure everything's working fine. But you as the management, you can't just say everything's working fine. You can't say that the controls are working fine. You can't say that the controls can't be better. So you as a manager will call an auditor. You call the auditor will be like, "What's up?" And auditor will come to your business. He'll look at all the controls you got, look at everything in the business, and make sure everything is going well. But he also betters the system. So if he finds that there's risks over there, also risks. Risks are things that opposes the control, obviously. So risks obviously are very bad. So auditor will look at the risks and so on, and yeah, basically help the business grow. Now, what is the main reason, or not the reason? Well, what is the aim of the audit, right? The main aim of the audit, right? So very easy. CIA. That's the acronym I know. Confidentiality. You need, as an auditor, to make sure the system. When I talk about always not the system, I'm talking about this business system. It's very confidential, right? It has customers' information, their cell phone numbers, email, IDs. Need to make sure nothing's getting leaked by hackers and all stuff. Integrity. The system of the business has to be integrity, right? It has to be reliable. It has to be accurate, right? So accurate. It has to be reliable. It must produce accurate output. It must be reliable. Whenever you want it, you must use it. Last one, availability. Whenever you need to use the system, it needs to be available for you to use it, right? There mustn't be times where the system is down. Like learn 20. I'm not gonna say it, but yeah, you know what I'm trying to say. Okay. Controls. Now, controls are there to protect the business from risks, right? It's used to protect the system of the business. There's different controls, and we're going to learn it all, right? So we need controls to safeguard the assets. Now, assets could be anything, right? It could be information, right? Information is an intangible asset, right? So these are all assets. It's achievement to desired outcome. So basically, all this over here, controls aim. The controls aim is to protect everything in the business, to make sure everything is going good. There's no risks involved in the business, huh? So now when we come to a control review, you as an auditor will do the control review. You will see that everything the business has done to protect this information, is it going according to plan? Is the control good what they're doing? You can't just be a manager one day and wake up and say, I'm going to put a control in place to protect the customer's data, but that control you put is not good. So you need an audit to make sure that control is good. So control review reviews the client approach. Remember, the client is the business. In managing and assessing the risks, okay? So you look at all the risks involved in the business, whether the control is helping those risks, okay? One thing you must take a note is mitigation. Risks cannot be completely destroyed. If I tell you that there's a world where there is no risk, that's 100% fault. You cannot completely take out a risk. So when you're saying that you want to take out the risk, you can't say you're going to take out the risk. You have to say risk mitigation. Risk mitigation means reducing a risk. Let's be honest, we can't take out the risk 100%, but we can reduce it. You can only reduce a risk. That's the furthest you can go, mitigation. We need to make a recommendation. So after we look at the controls in the business, we have to, if there's any recommendations that the business is doing wrong that we can improve and so on, right? More details about control objectives are covered, right? Impact of computers on internal audit. Now, internal audit and external audit is two completely different things. When we're looking now in computer auditing, we're mostly looking at internal auditing, right? Because external auditing is what accountants do. They will check the overall financial statements produced by the internal auditor. They will make sure your assets equals equities plus liabilities, make sure the figures in your financial statements are right. An internal auditor most likely will basically look at the controls in the business, look at the records, doing fraud, detecting fraud, making sure everything works well in the business. So more internal in the business, also employed by the business. So computer internal audit makes sure the computer systems in the business are working fine. Obviously, auditor, it looks at the controls, makes sure it's going good, recommending solutions, and so on. Changes in an audit trail or path. Now, audit trail, audit path, same thing. What is an audit trail? An audit trail, right, is basically a way of the system recording people's movements. Okay, so let's say you have pictured this a business, right? All businesses have computers, right? People will use those computers. So think about it as your history, right? Cell phone history, your browser history. Whatever you do is recorded, right, in your history. Now imagine if every person that uses a computer, a history is stored on that time the person used a computer, but it doesn't just say where the person searched. It'll tell them what websites they logged into, if there was any errors, what did they do, how long did they did it for. So it's all information related to what that user did in the computer, all stored in rows for everyone for specific time. That's an audit trail. The reason why they say audit trail is when you do an audit, you can follow how the flow of things went. So basically, so you can look back at the audit trail and build up to the events that happened. For example, a computer crashed, right? You need to go back to the time where it never crashed and see what happened to make it crash. So you look at an audit trail. Maybe a user just before it crashed, maybe he you know he wanted to go toilet but couldn't go toilet, so he hit a tick bomb. So the thing crashed, right? So it looks basically at the history built up to what will happen. Now, changing an audit trail. So audit trails, right? There's going to be a problem. What are these problems? Data retention or storage capabilities. Audit trails need to store data on people and so on, right? But it depends on the storage. For example, some audit trails can only store data for a month, some 6 months, some for a year. So now you got a problem. What happens if you look at the audit trail for last year, but it only stores for 6 months? Problem. Absence of input documents. When you have an audit trail, everything's on a computer. There's no like actual pages, documentation which you can get. Lack of visible audit trail evidence. So as I said, short period of time, it's not gonna last forever. Lack of visible outputs. Everything's on the computer, right? There's not much visible physical things you can touch and see when you're doing your audit. Audit evidence. So unlike the manual process, certain transactions not be supported by a signature of a manager or budget holder. This may alter the risk. Transaction may be irregular, ultra various. So basically, the you can't verify the documents when you're doing an audit trail. Uh, you just can't. It's very very hard, right? Because signatures can be fraud and so on. Legal issues. So obviously, when you operate with a computer online and you're like paying people, doing some stuff, there's obviously going to be laws you have to follow. So there's going to be a lot of legal issues. Changing internal control environments. Now, internal control environments basically means the internal control of the business. What did you have to do to maintain an internal control? Back in the days, in the 1900s, the internal control is very, very simple. Make sure the employee comes to the business and not doing anything wrong with the business. But now, 2024, your control is there must be no hackers. So you see how the internal control environments are changing consistently? So because these are changing, as you can see, computers now, people have to evolve to mitigate, to reduce these risks. Right? So what they have to do now is to control more stuff that they were not used to. So you as a business and auditor need to get educated about the more risks that's implemented, more risks that's come forth, and basically make sure everything that's new now that's going to affect your control is being monitored. So there's new opportunities for fraud and error. I told you, like hacking and stuff. New audit procedures. So there's new ways of auditing a business every single time, every single year. Because there's new threats, there's new things. So now people have to do different ways to audit them. Responsibility of controls. The responsibility of management, I told you, management to establish and maintain controls in order to achieve objectives, right? Management also has responsibility to apply these internal controls to standards to meet objectives. It's the duty of the managers, right? So the manager's duty is to implement controls, right? They must develop a cost-effective control. Now, there's something called marginal benefit and marginal cost, right? People who do eco will know. But basically, people who don't know eco, when you implement a control, the cost must be less than the threat. So, for example, let's say a control you're going to, for example, to prevent hacking, it'll cost you 100,000 rand. But if the hacker hacks your system, it'll only cost you 10,000. So why are you spending 100,000 rand to prevent the hacking? But why don't you just let the hacking happen for just 10,000? So you see how that doesn't make sense. So you have to make sure that the control it's very very high. Like what you're gonna lose money, yeah. Obviously the manager has to look at all the programs. Okay, so basically what this whole thing is saying, you can read, pause and read. The manager is responsible for putting controls in a business, right? The auditor just advises. Auditor is advises the business what to do, but the manager has to actually put the controls in place. Associations now can come at multiple choice. Which association? They give you a paragraph. This ISA, right? In association, so this one, Information System Audit Control Association, very important. Anytime you see a question where they're doing auditing, it's this, right? It's basically sets principles of what auditors need to do, right? It's also like how you get what is it called, ISACA, okay, chartered accountants, where auditors can get their like what is it called, certificate from or whatever, yeah. So they basically make sure new things, principles can emerge, right? New ways in which audits are done because the world is changing. There's new threats. Okay. So the IASACA standards contain basic principles and procedures, right? So some of these principles are responsibility, authority, and accountability, right? This always comes up. Accountability basically means the auditor, right, must be accountable. So if he is doing an audit in a company, he's representing everyone, the owners, the shareholders, everyone, right? He has to be accountable for what he sees. If there's something wrong, he needs to report it to everyone, the shareholders, everyone. Professional independence, he must be independent of the business, right? An internal auditor cannot be influenced, right? So basically what it means is that he must be independent in attitude and appearance. So he mustn't be like biased and stuff, right? He sees his friend committing fraud. Nah, he can't just like leave him alone. Organizational relationship. So it must be independent of the area being controlled, right? So for example, let's say in a business you got two main areas. You got the marketing area and the financing area. If the auditor is from, for example, the marketing area, you can't make him audit the marketing area of the business. He has to do the other one, the finance. So the auditor has to do a unrelated in the business, like what he don't do, so it'd be fair when he's judging, you know. Professional ethics, he needs to be professional, right? He can't go there watching TikToks. Hey, I'm telling you, being an auditor and watching TikToks is so cool, imagine. Yeah. Anyway, not the point. Due professional care. So when you're an auditor, you have to go to the hospital 10 times a day. I'm joking. Professional care basically means you must be a care. You must basically maintain care over what you do, right? What you do as an auditor is very, very important in this world. So you have to be very, very professional and do everything the best of your ability, right? Skills and knowledge, you're an auditor, right? You're a very, very high professional person. You need to have skills, right? You can't just buy a degree, certificate, or whatever. You have to actually work a lot, be good in your work. Professional education, continuously. Things change, controls change. Auditors need to look at all these new threats that emerge. Control planning. The information system control profession is risk assessment and other appropriate information. Okay, so control planning. The auditor needs to look at all the controls in the business and plan or look at ways in which he needs to improve those controls, right? Next, evidence. Auditors, when they go in the business to look at all the controls, everything, they need evidence, right? If they think the control is not working as what it should be working. You need evidence to prove it. You can't just walk in one day to ABC Traders and say, why are you depreciating land? You can't do that, right? You have to have evidence that he did it in the balance sheet or whatever. You need to have evidence for what you say. You can't be an auditor and just say something happened without completing evidence. Huh? Effectiveness. You have to be an effect. Remember, an effect is the best thing ever because effect lasts, right? Effectiveness. So when you do all the duties, your responsibilities, make sure it's very, very effective, right? You must achieve what you need to achieve in an audit. Be effective. Periodic reporting, you need to report what you do, what your findings are to management, right? If you're an internal auditor and you need to report what the auditors thing, like all the controls in the business every single month, you need to do that. Follow up is very, very important, then. So the information system control professional, so this is a person in charge of implementing internal control, is to monitor the performance of control procedures and review feedback, right? Provide correction action. Okay, so whenever you implement a new control, let's say in the business that before was lacking, you need to go and look up and see if that is doing good now, right? Commentary. It should be okay. So an engagement letter. Okay, the audit charge should be commentary. So we're going to do this just now in one of the other topics, but basically an audit charter needs to be drawn up by an auditor. Sorry, not by the auditor. The audit charter is given to the auditor. The audit charter basically says everything, all the objectives of an audit, what the auditor must do, what's his limitation, what he can't do. Sometimes things are very confidential, he mustn't see. So audit charter basically highlights the objectives, everything in what the auditor needs to do. Effective date. So this standards, all the standards above, was effective from 1st May 1999. So the same regulatory, whatever you call it, board ISACA, which we discussed before above, it's supported by South Africa. It's used by South Africa. Huh? Now, every time you think about assurance, auditors are assurance, right? Providers, they're assurance providers. They ensure you, they give you assurance that everything in your business is working fine. So obviously now this whole board, right? What they do is, besides creating these things, these principles, they promote all these educations, right? Skills. They train people. Let's see. They communicate to management, universities, importance of establishing controls. They promote also associational professional certificates, like how ISACA does when you qualify as chartered accountant. So they basically do a lot of stuff, right? Information system control techniques. Okay. So when you have controls, right, in a business, you need to know what type of controls are categorized as, right? Accounting controls are basically like looking at all the stuff you have in place to prevent your accounting getting like bad, like leaked or whatever, right? So all your financial statement mustn't get leaked or whatever, right? Protected. Transactions also mustn't get leaked. Operational controls are preventing things that are happening on a day-to-day basis. For example, people stealing, that's an operational control, right? People operating a computer wrongly, that's a control. Administrative controls, right? So basically, it basically concerns with compliance with management, basically. So administrative is basically like management. So basically, you look at everything, or everyone is complying with the management, right? Including policies. Elements of characteristics of good internal control, right? So very, very, very important. One of the best internal control measures, it's SOD, right? SOD means segregation of duties, right? If you're an accounting student in matric grade 12, this question came out in every single past paper we did. Segregation of duties. So segregation of duties basically means one person must not do everything, right? For example, if one person does a order for a product, don't make the same person do the order for a product every single day, because just now that person will get too used to the system and steal all the money. So make one day this person, one day that person's delegation of duties. So this is all characteristics of a good internal control. So segregation of duties, competency and reliability of personnel. So these are people that are involved in your system. They must be good, they must be trustworthy, make sure you hire the correct people, right? Appropriate levels of auditing. So authority. So make sure they have the best authority. Sometimes giving people too much authority is bad because they have too much ego and they'll destroy the business literally. So to make sure you give the right people the right authority. Now controls, right? For you to implement controls in the business, there's going to be limitations. You might not have enough resources, and yeah, that's basically a question that came out, right? So controls to implementing the business, you sometimes don't have the resources. Did I just say what on earth I said? You might not have resources to implement the control, right? Like for example, money, people to implement it. Huh? Accountability. Oh yeah, we skipped this. Accountability. Accountability basically means everything done in the business, right? Everyone must be accountable, right? So you can do this by having audit trails. So how does audit trails link with accountability? Audit trails tell you what each person did on the computer. That's accountability. It's accounting everything that person did. Accountability. Account saves what people did. Accountability. Components of internal control management and achieving business objectives are. So there's different types of control environments or components of internal control that assist management. Oh, they're components of internal control. So if you look at control and it splits, internal control measures, good ones are what? Sound control environment. Sound control environment, right, is the overall way in which the business does the control. Overall, all the controls in the business, the overall way of them like putting all those controls, managing it, making sure they're working. Sound risk assessment process. Now, risk assessment, right? Risk assessment is basically looking at all the risks in the business, looking at documenting it, making sure you know what the risks are, where they are, and so on. Right? So you're being aware of the risks. We'll do just now called something called risk management. There you actively putting control in place to prevent the risk. But here you're just documenting what the risks are, identifying it, and so on. Sound operational control activities. So obviously these are going to be aimed at the operation. So day-to-day working activities control must be good. So obviously employees. So as soon as you say employees, it's going to be operational, right? Because employees work with day-to-day operations. So teaching them skills or whatever, that's good control over there. Operational. Auditors categorization of controls, right? Different controls. There's preventive controls. Preventive controls are controls that you put before something bad can happen. Example, you can do segregation of duties. That's a preventive, because it prevents people from, example, stealing from you. So before something happens, preventive control. So these are the preventive controls examples. Detective controls are basically controls that are there when something bad happens. So let's say somebody enters something bad in a computer, you'll have a detection system. So system will detect that somebody is doing something bad. Clear understanding of law for anything controls and let's see. Surprise checks by employee supervisor, right? That's very good detective control because like you're a detective, right? You're looking at things that are happening. Let's see. Lawful. Okay, so all those must read, right? Different types of controls. Corrective controls. Now, corrective controls are controls in place that make sure something must not happen, right? So yeah. So minimizing the threat. So it already happened, right? So you need to make sure that thing that already happened will not happen again. There we go. Now audit trails, we discussed this already. Objective in audit trails: detecting unauthorized assets real time and after, enabling rebuilding of events, promoting personal accountability. Personal accountability. User controls. Okay, user controls. Now, when you talk about user controls, you're basically talking about all people like employees who use something, user controls, who control something in the business. They're obviously going to control most likely the computer. So they're going to submit data obviously into the computer. Okay. So obviously input control. So you have to audit all these, right? So when they always say user controls, you need to do input, process, output. So look at all those controls. Employees entering the data, is it correct? Processing, is the computer putting correctly? Output, is it producing good documents, etc. Error control, so it detects errors, right? So you need to make sure there's no errors in the business, huh? So no error of the data in the business, right? In the computer, there's no errors over there, huh? System development and acquisition control. So a strategic master plan, project controls, okay. Key elements to be considered in a system development and acquisition control include the following. So whenever you need to do like system development, right? Basically making something better, you need to have a strategic plan. I mean, that's obvious, no? Project controls, when you're doing something like a project, you need to have controls in place, have a manager of the project, make sure there's no threats involved, right? Data processing schedule, make sure all tasks in the project is done effectively. System performance management, make sure that you are doing the exact things that you should be doing in a project. Make sure you measure them against what you should be doing. Post implementation review, after you implement the project or something, make sure that it's doing what it needs to do or what was achieved. Controls over system implementation. So some system implementation means you're putting the system into use, but after you put the system into use, you have to do acceptance testing. Acceptance testing is basically looking at the system and making sure what it's supposed to do, it does. Literally everything, you need to test it out. So you can pause. It basically tests every single thing, yeah, right? Literally every single thing of the system, make sure it works before it can be actually used. Role of the information system auditor on the testing. So it must look up how the managers or the people in the business did the user acceptance testing, right? Is the user acceptance testing they did, is it good? Did they test everything, huh? Control over systems and program changes, change in management control. So obviously when the management of a business change, you're gonna have different people working the businesses. But before everything changes, you need to make sure the one management and the second management, they're both in line with the business. Make sure they know everything about the business, etc. Right? And obviously avoid unauthorized systems. So the managers that people are leaving the business mustn't have the same like passwords or whatever. Authorization controls, this authorization like passwords and stuff. So to make sure people in the business, they can't just enter in a computer without a password. They must have authorization. Documentation controls. You must have documentation involved in the business, whatever you do, right? Whether you're doing contracts with the business or so on, you need to do documents, right? If you maintain the system, spend money on a system, you need to document it, right? Quality controls. Quality controls are controls aimed at quality. So quality is like the products and services you produce. You must produce good products and service quality. Control means making sure that you produce the best products and services. So you need to compare standards, right? So you need to be like, there's different standards to like products. So you need to compare. For example, the product must be this weight, that weight. You must compare it and see if it actually is that. Any defects, so defects in the products must be uncovered and reviews must be done. The relationship between information system and financial auditing, very very good relationship. Basically, a financial auditing, they use computers, and obviously computers can have errors, can have hackers, can steal financial information, so it's correlated at 100%. Now, whenever you look at a threat, or sorry, a risk is categorized as three factors: threat, vulnerability, and impact. So anytime you see risk, right, you must know these three things: factors. Basically, factors are things that make this go up, so the risk go up or down. And yeah, we done with section 2.